That was their objective, stable prices. Now, few central banks actually achieved that, but that was their goal. Central banks, some of them had inflation targets or limits, such as 2%. But it didn't mean that you wanted to have inflation of 2%. It just meant that if it got above 2%, that's when the central bank would really have to tighten to bring the rate of inflation back down to pursue a goal of price stability. Well, central banks no longer consider price stability a desirable situation. Central banks now think that we need inflation, that 2% is not really a ceiling but a floor, and that if inflation is lower than 2%, the central banks get nervous and they think they got to print even more money to make sure that they have a sufficient level of inflation. Now, why do all these central banks want to create inflation instead of fight it? Because they understand that the whole global economy is now being propped up by inflation. Overly indebted governments need inflation. Central banks are trying to give governments an easy way out. They don't want to force governments to honestly default. They want to allow them to inflate their obligations away. Governments also, particularly in the United States, are trying to prop up asset prices, nominal asset prices, real estate in particular, but also stocks. The only way they can do that is to create inflation, keep interest rates artificially low, and keep on printing money. So far from there not being any more reasons to buy gold, which is what I'm hearing all the time, the bull market is over, there's no more reason to buy gold. There are trillions of reasons to buy gold. There's more reason than ever to buy gold. The problem is people just don't understand that. Now, we are now having potentially a correction in the stock market, which is overdue. We had a reversal day today, so we'll see if we get some more downside. And maybe if we get a pullback in the stock market, that's going to be a catalyst to revive interest in gold if, in fact, people believe that the reason gold is weak is because stocks are strong. But eventually, I think gold is going to be strong regardless of what stocks do, whether they're rising and falling, because you have to understand what's driving the stock market is not vibrant economies or growing earnings, it's inflation. It's debt, it's quantitative easing, money printing. That's why prices are going up. Now, I read an article today about oil prices, and the title was "The Mystery Behind the Rise of Gasoline Prices." The mystery. And the article tried to uncover that mystery, yet not once did the article mention, and it was in the Washington Post, not once did they mention the Federal Reserve or quantitative easing or artificially low interest rates. No, I mean, it's easy to solve the mystery if you understand there's inflation. It's just if you believe there's no inflation, then you find it mysterious that prices are rising even though the government says they're not. The bottom line is I think bull markets climb a wall of worry, and they generally try to move with carrying the least amount of baggage. They want to get rid of the excess baggage. There are some weak hands that are being flushed from the market that I think, as again, came late, never really understood the fundamentals. I think you're getting a lot of stop selling. You have people who were trading these markets on leverage. They put stops beneath the market. Once the markets decline, you trigger those stops. You get additional selling. You break through some short-term technical indicators. You get more selling. I think we're getting a lot of shorts trapped into the market. Meanwhile, central banks continue to buy gold, even though investor demand was declining a bit last year. Central bank demand was on the rise. You have central banks in Russia, in China, India, around the world buying gold. Believe me, they have a lot more gold to buy, and I think the current weakness gives them a great opportunity to do it. In fact, one of the reasons that central banks haven't been aggressive or more aggressive in their gold buying is because they don't want to push up the price. Well, the best time to buy gold and not push up the price is when the price of gold is falling. So I would take advantage of what's going on right now, of people who really have missed the gold bull market, trying to make excuses for why it's over. I think it's still early in this cycle. I think the lion's share of the gains in gold and silver are in the future, not in the past. And I think the smart money is going to do the opposite of what the dumb money is doing now, which is they're selling. We want to be buying. We want to take advantage of this dip to increase our positions in gold and silver. And, of course, if you have yet to take a position, now's the time to do it. I can't promise you that prices won't go any lower than they are today. In fact, they probably will. Prices always go lower than you think. But I think that if you try to hit the absolute bottom, more likely than not, you're going to miss the rally. I think when we get a rally, it's going to be explosive. And I think a lot of the people sold are going to be watching this from the sidelines. I think there's enough negativity built into the market that gold might have to top $2,000 an ounce before we bring some of these timid investors back in. You know, one more thought on this idea that because the economy is improving, there's no reason to buy gold. If the economies were contracting because central banks did the right thing, they raised interest rates and forced governments to cut back on their spending. If we had some austerity on the part of governments so that our economies could restructure, particularly in the United States, if the Fed acted responsibly instead of recklessly and took the punch bowl away instead of spiking it, that might be bearish for gold. But what they're doing now, monetizing all this debt, giving governments an easy way out, allowing them to continue to borrow